To begin our panel discussion, I would like to invite Mr. Dhananjay Gokhale sir, Mr. Lokesh Gupta sir, and Mr. Bishan Shah sir. So, a very good evening, all respected panelists, fellow professionals, and the dear members. It is my indeed privilege and honor to welcome you all to this insightful panel discussion on the very interesting topic, which is expectation from branch auditors. So basically, bank branch audit has always been a crucial pillars in maintaining the strength, transparency, and credibility of the banking system. Over the years, the role of auditors has evolved significantly. Today, auditors are not merely expected to verify numbers, but to understand complex banking products, interpret regulatory framework issued by the RBI, and identify potential risk may impact the financial health of the bank. In the present environment of dynamic regulations, digital banking systems, consortium lending structure, and sophisticated credit arrangement, the expectations from the bank branch auditors have increased manifold. So from areas such as asset classification, restructuring, LCBG transactions, red flag accounts, consortiums, and multiple banking arrangement, to the examination of CCOD limits and suspense accounts, auditors are required to exercise professional skepticism along with the strong regulatory understanding. The objective of today's panel discussion is not only to revisit the regulatory framework, but also to gain the practical insights from our esteemed panelists, who brings with them the years of experience in bank audit and financial regulations. Their perspective will certainly help us, all of us, to better understand the nuances, challenges, and best practices involved in the conducting the effective bank branch audit. Through the discussion, we hope to bridge the gap between theory and practical and equip auditors with the valuable knowledge that can be applied during the upcoming bank branch audit assignments. With that note, I would like to express my sincere gratitude to our respected panelists for sparing their valuable time to share their expertise with us. So let us now begin with this engagement and insightful discussion. Before that, I would like to call Mr. Bishan sir to give some valuable insights.
So before starting an audit, we must realize and think that whether systems are working or not. Because I seen that Hemangini ma'am was speaking something and it was not working. Most respectful, learned speaker, Dhananjay bhai, Lokesh bhai, past vice chairman of WIRC, CA Hitesh Pomal sir. Sir, because public demand is that they also want to hear from you because you have a greater experience so far as the bank audit is concerned. And Maharshi bhai, Shwetang bhai, all members, it is really a pleasure and pride that when I received any appointment letter for the bank audit, we feel that it's a lottery for all of us. But along with the lottery, it is also a responsibility as well, because we always been, soft target of anyone. If something happens into the bank or a borrower's account, always people say who was the auditor or who is the auditor. And we are being judged by conduct of others. So I think we need to be very much cautious. Though teaming and leading happens there, but we should think, analyze our intelligence and try to see whether teaming and leading is there or not. In my earlier days when I perform statutory bank branch audit, even I also felt that yes, it's a lottery, and I travel from Ahmedabad to Bangalore. At that time, State Bank of Mysore was there, and I also felt that yes, it's an amazing opportunity. But when I went there, I found that teaming and leading happening in branches there. And when I tried to, show that to their higher authorities, they said, sir, please come here, let us discuss on it. So whenever we are trying to give any MOCs, they are doing pressure tactics. Even if you are in the branch, they will say, sir, क्या मंगाऊं, juice, फिर थोड़ा 1 घंटा जाएगा, फिर बोलेंगे लंच पे जाएंगे, और लंच पे वो बाहर ले जाएंगे. ब्रांच पे तो करवाएंगे नहीं. So we need to plan our audit in a such a way कि we have a limited time. So try to see that we are staying in the branch, perform our audit as well, and we should overcome those pressure tactics. One thing is AI. AI is there and we all want to use it because in GST practice we are using it. It's a good thing. Yes, we need to use AI tools or information technology tools, but we need to take into the consideration DPDP as well and privacy of not even banks, borrowers as well, because their data you are sending on any chat GPT, Claude, anything. So try to redact all those things when you are using AI tool. And if you are having a licensed tool, then it's better because information being shared to anyone else other than or in a decode format or coding format, it will go, then it's fine. Otherwise, there is a breach of information or DPDP Act as well. We need to think on that, but I am pretty sure that with the use of AI, maybe you use lovable AI tool, try to see that how you can, or even our Excel for that reason, and try to evolve and explode through AI, because in AI time, nothing is impossible through AI. Whatever you will think, it will give you the result. Try to explore, and yes, happy learning again and great season. Thank you very much.
So let's start with the discussion. So the first question is, sir, from your experience, what are the key aspects and critical considerations that auditor should focus before commencing a bank branch audit to ensure an effective and efficient audit procedure?
So when you ask for, I think there are two portions to any audit for that matter, why bank audit only. One is any audit you have to do, you have to first understand what you have to do, what is the final outcome which you have to achieve. And based upon that, you need to have a basic plan at least in terms of what are the resources which are required and what is the timelines which you have. And see, like when we used to study, we used to have a plan in terms of कि मुझे इतना काम इस दिन करना है, इतनी पढ़ाई आज complete करनी है, revision के लिए time देना है. So that is the plan which you need to have. The time is very limited. They are not going to give you extra time in any case, right? And the resources you have to plan in the sense, one, like we are sitting here trying to understand the provisions, trying to recollect whatever we have done in earlier years. Similarly, your articles, your employees which are going to go with you for audit, they also need to be trained. So maybe you need to have an in-house training program where you can actually train them. It is very difficult to train people, especially when you're on the job, because you will be doing your own job and they will be doing their own work. So very difficult at that point of time to basically train them on the job actually. So you need to train them before you actually go for the audit. Then of course, when I look at bank statutory audit, it is basically comprising of basically three broad aspects. One is your statutory audit, another is LFAR, and third is the certification part. So three things you basically need to achieve. Of course, if you look at LFAR, it practically covers most of the areas in the financial audit also, but still there would be certain areas which may not get covered by LFAR. So you will have to basically design your own program as to what you have to achieve, what are the resources which are going to be used, and then based upon it, you will have to execute the program. So I think that's the very basics before you can actually start off with the audit. Unless until you actually plan and do it, the problem is basically that the work is so much and you create so much documentation apart from it that you find it difficult to actually complete the area in the limited time which is available to you. And I think the most critical part when you're doing the audit is to basically find some time on a daily basis to summarize whatever you have done during the day. What I have seen practically is that you keep on doing the audit, and when it comes to summarization at the last, you suddenly realize that there's so much to summarize and there were few issues which you have left in between. The information was not complete. So it is very important that you summarize on every day what you have done during the day, so that by the time, whatever time you are going to devote, you exactly know what you have done, what are the issues, and how it is to be reported in the audit report.
Thank you, sir. Moving to the next question, sir. Could you please share your insights on the key audit considerations and risk areas involved in the audit of LC and BG? Because personally, I believe that during the bank branch audit, it is most, neglected area during the bank branch audit.
So as far as LCBG is concerned, first thing is that we need to understand that what is the process which is followed by the bank as far as LCBG is concerned. So one of the key area is that firstly you need to see that whether it is a sanction limit or whether it is a one-time kind of a limit which is given, which might be the case in certain cases. Another point is that as far as LCBG is concerned, the SFMS system is there whereby the LCs are no more issued in a physical form, except in certain cases of the FLCs especially and FBGs. Sometimes LCBG may not be getting issued through that system because there are certain countries wherein physical BGs and LCs are required. So barring those cases, now it's comparatively a simpler thing. The real challenge is that whether the LC or BG has got issued through SFMS or not, many a times the auditor may not have access to that system.
Correct.
So it will be only merely a printout which is available. As an auditor, you need to be little skeptical about as to whether that printout is something which you need to rely upon or not. Unless and until there are other circumstantial evidences are there which can prove that the LCBGs are issued through that. Second thing is that as far as LCBGs are concerned, you need to pay attention to as to how many LCBGs are devolved, what is the reason behind that, and whether those that kind of a devolvement is giving rise to a possibility that there is an incipient sickness in a particular account or not. Because that might be the initial indicator wherein LCBGs are getting devolved. It might be an indicator of possibility of that account turning into NPA because of inherent weakness. There might be a possibility that it can be one of the early warning signal, wherein you have to focus. And last but not the least, the income recognition criteria has to be followed as far as LCBGs are concerned. As far as LCBGs are concerned, the banks are having different practices wherein the commission gets accounted for. In some banks, it is on time proportionate basis.
Correct.
Some banks claim it and say that it is, it's not going to be reversed in the sense it is not refundable. Correct. And if it is not refundable, it's a one-time kind of a fee which they have earned. Again, to repeat, actually, it has to be in sync with the accounting policy which the bank has adopted.
Correct.
Apart from that, LCBG margin and other things are required to be taken care of. And last thing is that if a bank is having a corresponding bank arrangement, with another bank, typically it happens in case of FLCs and FBGs. You need to also confirm about whether the bank has obtained the balance confirmation certificate from that other corresponding bank or not. There might be a reconciliation difference, because of which the LCs or BGs may not get accounted for in the books of accounts.
Correct.
So these are the typical key considerations.
Correct. Thank you so much, sir. Thanks a lot.
If I may add to one point here. In case of BGs, we need to be very careful about one aspect, which is like LCs, as Dhananjay said, are getting issued through SMF, which is structured messaging system, which is basically a counterpart of what basically is there for the international system. It is devised for the inland system. But BGs still are not getting issued through SMF in most of the cases, because generally it goes to a government department and the government departments are not happy with a piece of paper, right? So generally what the banks are still doing is they are issuing BGs through a physical system. Now there is a lot of frauds which are still happening there, which is, if you remember the case of Nirav Modi scam, what really happened there was that there was a issue of a SWIFT message, which is basically a LOU or LUT, which created a liability for the bank, but that liability was never recorded in the books of account. Now, the similar system can be done in case of BGs also. And recently also SBA reported, whether they have reported or not, I am aware of cases where FIRs have been filed against some bank officials of SBI where they have issued BGs, but in that case, the customer complaint that the BG was issued by the branch, but there was no liability which was recorded in the books of account. So what is basically happening is these BGs are basically getting issued on stamp papers.
Okay.
Now stamp papers anybody can obtain, and it can be signed and given to a customer, and he will believe that he has got a BG. But the liability, corresponding liability, was never recorded in the books of account. And what RBI has said, even if you look at the latest circular on November 28, 2025, is that the BG should be issued on security form serially numbered. So basically it means that like we have a security form for FDs, where they are pre-numbered and given, supplied to the branch in a controlled fashion, and you can actually check how many they have utilized and how much is the balance. Similar procedure should exist in case of BGs, which a lot of banks are not following actually. So certain private banks have been doing it, like I am aware, ICAI Bank, there are other banks which are actually following it, but most of the public sector banks are still not doing it. So there is a possibility that some branch manager might have acted smartly and issued BGs which are not issued on security form, because there is no procedure which the bank itself has devised for such a cases, and the liability, corresponding liability, is not getting recorded in the books of account. So it's a very, very serious issue as far as the internal financial control is concerned, and you should keep that in mind while you are doing your audit at the branch level.
Okay. Thank you, sir. Moving to the next question. So, sir, could you please explain the key difference between consortium arrangement and multiple banking arrangement?
So as far as multiple banking arrangements are concerned, typically the bankers are not really having an inter-se agreement or a joint agreement which is executed. So it's all the banks can lend to the borrowers on different terms. As far as consortium facility is concerned, it's a kind of a joint lending exercise wherein the agreement is common, a common agreement is there. All the banks are having practically equal right as far as the recoveries are concerned, as far as the legal rights are concerned, which is not the case with multiple banking. The challenge in multiple banking is that many a times the exchange of data which has to be there between the banks is rarely followed, which is a common case in case of consortium lending. Because in consortium lending, there will be a bank will take a lead, someone will be a lead banker, need not be the largest bank also as far as borrowing is concerned. Any bank can become a lead banker, and typically the lead banker will ensure that the data flows to all the consortium members, in a equal, periodic intervals. As far as multiple banks are concerned, even though the RBI is insisting on sharing of data, the data sharing rarely happens. And there is a high probability that sometimes in multiple banking, there is a double financing which happens. Because there is no correlation between what the other bank is lending and what another bank will tend to do. Just to give a simple example, in fact, in multiple banking, many a times a working capital limit is availed from maybe one bank, say bank A. The bank B goes and gives some unsecured facility based on working capital itself. So on paper, it is not a secured loan. Okay. But the nature of facility is working capital finance only, which is given against certain set of book dates. Typically, this happens in case of dealerships, wherein the main company, which is the supplier, sometimes there is a different kind of arrangement. Correct. The challenge with the auditor over here is that even though there is a double financing concept, technically the bank keeps on arguing by saying that there is no security which is given by the other bank, so there is no double financing. It's an unsecured loan. So as far as the auditors are concerned, they need to be little careful. Okay. And another aspect is that typically in case of large exposures, one way to look at that is you need to find out all these multiple banking arrangement by way of reviewing the conduct of account, so that you will come to know that where the income flow is. Once you are aware about that, then the things are simpler. That you can always pinpoint about there is additional facility which is availed by way of which it is getting routed through your main facility. Correct. But multiple banking is something there is practically no control of either of the bank. Correct. Exchange of data is not there, and in fact, what earlier Lokesh was referring about the diligence report, the diligence reporting started off because there was no exchange of data which has been carried out within the banks. And there is an interesting thing about this diligence reporting, because it is having a ramification on consortium and multiple banking, because it is mandatory for all these banks, wherever more than one bank is involved. Correct. Now the challenge over there is, when CVC has found out that there is no exchange of data and diligence reporting was mandated for the bank, it's almost 20 years now, the issues have remained same. In spite of having technological advancement, there is no exchange of data. Still diligence circular holds good, that whenever more than one bank is involved above threshold limit, diligence auditing is mandatory. It speaks a lot about the way the data gets shared. And equally, it is more challenging, for the auditors actually.
Correct.
So that's the basic difference between, co-lending, I should say, as a consortium lending, and a multiple banking facility.
Correct. Thank you, sir. Moving to the next question. So, how is the one account NPA, all account NPA principles applied in case of consortium lending arrangement, particularly from the perspective of the asset classification during the bank branch audit?
So as far as consortium bank is concerned, it's per bank. So even if in consortium, suppose there are 5 consortium members are there, an account might be marked as NPA in say 3 banks, but in other 2 banks, it will entirely depend on conduct of that account in those particular banks. Only precaution which banker has to take or even the auditor has to take is, there is a probability that a particular bank declares that account as a fraud account, and the rest of the banks keep on claiming that the account is standard because conduct of account is good. Now that's where actually you need to apply your professional judgment.
Okay.
Easier way to apply the professional judgment is that if one of the consortium member has declared that as a fraud, you can always say that there is an inherent weakness as an auditor and mark that account as NPA without getting into other complexities.
Correct.
Whether to declare that fraud or not, that is something which is a banker's prerogative. You don't have to really indulge into that, but that is a better approach to at least ensure that the provisioning part is done.
Correct. So, same scenario in case of multiple banking, how as an auditor we would
Actually, in
identify?
multiple banking, you will never come to know what the other bank has done.
Correct.
Unless and until CIBIL data is accessed.
Correct.
Now, CIBIL data is something which typically auditors cannot access
Yes.
because it is not in public domain. You have to be a financial institution, eligible financial institution to
Yeah.
get that data. So, unless you get that data, you may not even come to know that some account has gone into NPA. In consortium, comparatively, it is easier because information flow is supposed to be flowing from all the banks and going to all the consortium members. But in
Correct.
multiple, it's practically not possible.
Yeah.
Unless in public domain something crops up, you remember that that particular account is there at your branch because you cannot correlate that also. Then only it is possible. Otherwise, not.
Correct. Thank you, sir. Moving to the next question. So, could you please explain how the concept of restructuring works in the banking, and also what are the additional provisioning requirements applicable at the time of restructuring, and what key aspects should auditor focus on while examining the restructured accounts?
So as far as restructuring of advances is concerned, let me first talk about what is restructuring. So wherever any economic benefit is extended to the borrower, either in the form of concession in rate of interest, as one-off case, not as a part of market trend, or there is a concession given by way of postponement of any repayment of principal, it will be called as restructuring. Now what is not restructuring is that sometimes there are schematic products are there, wherein the entire class of product, there is a concession given. So maybe say 0.5% rate cut is there for say housing loan. This is an example wherein it's never called as a restructuring case. Compared to that, there is another case, like suppose in case of housing loan, again I am taking the same thing. Suppose the borrower is exiting from the bank, or maybe a commercial loan is there. The borrower is right now having say 12% rate of interest. Borrower comes to the bank and shows that there is another sanction letter which is at 10.5%. He negotiates the rate, and because of market trend, the bank reduces the rate of interest from 12 to 10.5 just to match it.
Okay.
In that case, still it is not called as a restructuring of advance. Barring all these things, everything is restructuring. So just to give another example is that, suppose say a term loan account turns into a drop line OD, it is not a restructuring because, a term loan turns into a CCOD, it's a restructuring.
Correct.
Because you don't have to pay, so you have to pay only interest. Vice versa case, like a CCOD getting converted into a term loan, it is not a restructuring.
Okay.
The reason being there will be early repayment. Interest along with principal will be repaid. So there is no concession which is extended.
Okay.
Yeah.
I understand and I fully agree that those CCOD by its own nature is payable on demand. It never gets paid. There India and India alone.
Yeah.
Basically. So
Correct.
RBI came up with the new guidelines for that when there is the exposure of more than 150 crore. There has to be, but
That is, yeah, correct.
limited actually.
Correct.
My point here is, sir, that CCOD, don't you think that regulator should come up with the clarification in this regard, that if CCOD by its very own nature, if it is payable on demand, and if I am converting that facility to a specific term span, doesn't mean that that RBI should come up with the clarification in this regard. And vice versa, you agree, I also agree with this, that if it is converted into term loan to CCOD, that is also a restructuring.
Yeah.
Now the point is, I take one more minute only, sir, that since the IRAC norms, it is almost settled now. So far as the automation of IRAC implementation is there, this is the fourth year and this will be the fifth year. It is also settled now, there is no. Now the point is that how the auditor will find out the aberration in the classification of the advances. My experience on the basis of last year of this quarter only is that the branch, they are tweaking with this system basically. That manual intervention, right, that is creating a problem. For example, in the retail loan, you see everybody knows that India, not only India, but globally also, everybody is after the retail loan. All the financial institutions, including public sector banks, private sector banks, they are after the retail loan actually. The only point is that what I have observed is in many of the cases just now recently, that the branch manager or the branch incumbent, they are changing the moratorium period. It is a very simple this thing. Moratorium is generally, barring infrastructure, it is generally for the repayment of principal, if it is there for 3 months or 6 months, right? But they are changing it, the principal repayment also is, they are classifying the repayment, the concession is given in that case. I expect, and I want your expert opinion on this, that how as a branch auditor, you see, we are talking about branch, we are not discussing about the bank as a whole, will be paid for the branch only. So the only point is that the branch, they are playing around the system. One more issue is about, so that it will be much easier for you to answer also, is about the classifying the account as the technically written off. Once the account is NPA, you have explained what is the meaning of the technically written off for cleaning up of the balance sheet, that once the account is technically written off, it ceases to exist in the books of the banks, right? But for the recovery purpose, it will continue to appear in the books of the branch only. So my point is that for this purpose, for cleaning of the balance sheet, don't you think that the banks are hiding their NPAs by resorting to classifying the account as technically written off, even if the account is within the substandard category itself?
Yeah. Okay. I will answer all the questions to the extent possible. Now, as far as that CCOD, we presume that it is repayable on demand. It can be called back on demand. Something similar exists in term loan agreements also. That if the bank decides to call back that account, that is very well permitted, even though the bank doesn't exercise it. We need to check up the term loan agreement. Even though there is an installment which is given, the bank always has a right to recall the accounts. Bank rarely, uses that right. It's not common that the banks are using right to call back the account. It's a callback account, Like just to give an example, suppose the bank feels that, there is something wrong, suspicious about that, but they are not able to prove that it is a fraud, they can call back the account. So calling back that account is very similar to the demand which the CCOD account which one can make. Now the question is, CCOD account technically they are renewable at every year. So theoretically one can say that I am not going to renew that account and call back that account. Practically it doesn't happen. So as far as these things are concerned, my view is that instead of saying that from callable account you are converting into a non-callable account, that is something which may not be the case, because the agreement will provide a clause wherein the banks are having, they are entitled to call back the account. If not, the better way is that you mention that in the LFR, let that get escalated, because this is not really a point about true and fair view. It's not directly relevant as far as IRAC norms are concerned. Why I'm saying directly relevant is that this point is difficult to prove actually by practical examples. Suppose the bank says that we have a right to call back the term loan account also, it's a dead end actually, because you cannot argue beyond that, because vice versa, the bank will also say that CCOD also, there is a right to call back the account at the year end, which doesn't happen. So that was, my view as far as conversion from CCOD to term loan is concerned. It's not really a kind of a postponement into multiple years. It's only a mechanism wherein it's a drop line OD kind of a thing. Means just to give an example, suppose a drop line OD is there. Even in drop line OD, what is supposed to be done is that at every year end, the account has to be reviewed or renewed, in technical sense. How far the banks are doing that, that's a different, issue. Because, some banks are having even housing loans which are in the form of drop line OD. And they're expected to renew that, at yearly intervals, which typically happens in the form of review. So let's leave that aside. But that was one view, which I will like to take. Second one was about how to find out which are the accounts which are restructured. Now, frankly speaking, actually, unless and until you have an exception report available through the system, you cannot find it out. Other method or other, I should say the proposition as a branch auditor, what I would have done is that whenever in LFIR I specify that which are the accounts which are verified by me, I will restrict myself only to that extent. I don't have any obligatory thing that I should verify each and every account as far as master data change is concerned. Having said that, what I need to ensure is that in LFIR, there is a para wherein I can communicate with the central auditor and the management of the bank. I need to specify that there is no exceptional report which gives me audit trail with respect to change in EMI, change in rate of interest, or any change in installment per se. And why I am saying that is, in many softwares actually, all popular softwares I should say, they keep on changing the repayment schedule. So suppose a loan was sanctioned in say 2020 for 15 years. If today if I go at the branch and if I ask for the repayment schedule right from inception till end, these softwares are not having this facility available with them. Forget about restructuring. It's restructuring is secondary. If I'm not able to get key fact statement like repayment schedule, the question of restructured related component being made available through system will never arise. So better to flag it actually and restrict yourself. At the same time, whichever accounts you are choosing and specifying that these are the accounts which you are verified, in those accounts you can restrict it by saying that only to that extent I was able to verify. And I will stop at that point because you cannot verify on a 100% basis, but depending upon the bank's robustness of the system, exceptional reports are available in some banks. You have to rely on that. But wherever you are relying on particular system-based report, ensure that you are keeping that point specified in the MRL by saying that this report was tested by the bank, and then you can say that based on MRL representation you have relied on it, because you don't have any obligation to test the system. You are a statutory auditor and not the system auditor. So that was the second thing. I know that this answer is not fulfilling the requirement, because it's not that easy to find out the restructured account if someone is playing a mischief with that. By changing the moratorium period, and if you don't have exceptional reports available, you practically cannot find it out. So you need to reach to the level of getting into those exceptional reports. Some banks are having that exceptional reports.
How I came to
Yeah.
know about this is that I will, for the benefit of our members basically, I would like to explain in brief about that only. That I have this system actually, I am old professional auditor, and I know.
First and foremost, friends, Dhananjay Gokhale is my very, 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 very dear friend and guide, just like Lokesh ji as well as the Niranjan Joshi. And whenever I am doing the central statutory audit of a bank, right, whatever and wherever I am, whatever the query is, whatever doubt I have in my mind, I will, without blinking eyes, I can speak to any of them, and we all have the right to agree to disagree on any of the observation or the opinion so far as this. And in case of Dhananjay, I am more privileged because he has given me that liberty that you express your opinion also, and he is the authority actually. But for the sake of argument, वो छोटा बच्चा जैसे बोलता है तो मैं तो बात कर लेता हूँ किस तरह से होता है. So the first and foremost is about my experience. I am a chartered accountant because I am doing bank audit only. Otherwise, I don't know ABCD about accounting standard or income tax or GST for that matter, any other thing. The only thing is that my method, Dhananjay, to arrive at it is, I'm just speaking about one public sector bank only which I am doing. I was doing the audit for 30th June 2025. I went to one branch, Mercy. Then I told my team members that whatever the samples we have selected, other than the specific this thing, new accounts or whatever, new renewed or whatever, generally SMA 012 is a very good tool basically. If one should know that what is SMA 01 and 2, right, you will have the entire idea about the entire advances of that particular branch. My style is that SMA 2 and SMA 3 is on the cut-off date. That is, in this particular case, it was 30th June 2025, right? And on a random date also, 22nd May 25, what was the SMA 2 and what was the SMA 3? And 30th of April or say 27th of April, what was the SMA 2 and SMA 3? And we picked one or two account basically by the name of the borrower, that was Dr. XYZ. Right? And I thought being a doctor, his account should not be in SMA 3, and that was continuously appearing in SMA 3. So overdrawings were nearly about the NPA date, 88 days, 87 days. Then I inquired with the branch manager. Then I told him, for me, as an auditor, forget this, what Bisan was discussing about AI, the new normal is AI only. But the thing is, I being the traditional auditor, I will always go with the sanction letter duly acknowledged by the borrower. And second thing, the statement of account. These two paper, which is if physically available, then in that case, if you go by the statement of account, the borrower's behavior you can very well examine from that statement of account only, right? So in that case, I told my team member that he gave me the statement of account. So for example, on 1st of January 25, the outstanding was 100 rupees. And on 30th of June 25, the outstanding was 102 rupees. So without wasting a minute, I told the branch manager that this account is NPA. It was plain vanilla term loan, EMI backed, every month the installment was to come, EMI was there. The balance as on the 30th June 25 can never be more than balance as on 1st of January 25. Simple, that is what I understand. And I told him that this account is NPA. Then Dhananjay, he was not ready to agree with me. And incidentally, he was also a chartered accountant, and his credit manager, that lady, was also a chartered accountant. And she told my team member that your sir has gone mad. He doesn't know about the IRAC norms. I said, "ठीक है भाई, होगा नहीं आता होगा." But in that case, since afternoon, around evening, late evening, he was on his computer. He said, "Sir, if I sit in my computer, then and only then I will be able to." The ultimate is, "Sir, though I am a chartered accountant, but I don't know ABCD of IRAC norms." That is what you told to my team member. But the point is that in plain vanilla home loan, right, the balance outstanding as on the date of audit, right, can never be the over and above the balance outstanding on another particular day in the past. In this case, it was 6 months or 3 months, whatever it is. Then we went, અગર મને તો એવું છે કે કોઈ ના પાડે એટલે પછી તો એમાં પડવાનું જ, ભલે પછી એમાઉન્ટ મટીરિયલ છે કે નથી, બરાબર. પણ પછી then in that case I came to know કે when we checked the system, Dhananjay, so the moratorium, the loan was sanctioned in 2018. Right, up to 2024, the account was very well running, absolutely. And then somehow in the system, instead of principal moratorium of 6 months, right, see, interest moratorium, interest was also parked in the moratorium for 6 months. So the entire repayment schedule changed. So my earnest request to all of you, means all of us rather, who are doing the branch audit is, you select only 1 or 2 accounts, that is sufficient. But whatever account you select, go into the deep, starting from sanction till the end. That is what Lokesh ji explained in the LFAR, no? That sanctioning and monitoring and disbursement and then final this thing, that we need to see. And second most important thing, Dhananjay, sorry, Muntaro time by Leilong, but the most important part which I have, again, my submission is that I have some little bit of difference of opinion, is what you explained at the time of your deliberations, that whenever the lump sum amount is paid, right, and my Theo balance, for which we have discussed, but for the benefit of, again, it is absolutely okay, we agree to disagree, that is fine. But in my particular case, that if 12 months installment is paid, if you recall what Dhananjay sir was telling, that I have paid 12 months installment, right, and there is every month debit of the interest for another 6 months, and my cutoff date is 31st March 2026, right, and I have not paid, and I am not obliged to pay also, right? Because my theoretical balance as per the repayment schedule agreed upon by the borrower and faded in the and the ledger balance, my theoretical balance is always higher than or lower than the my higher than the my ledger balance. But in that case, if I go, my interpretation to the overdue as per the IRAC norms is, right, that overdue means if interest and or installment remains overdue for 90 days. Interest and or. And the second thing is that if I am paying the lump sum amount of 12 months or a lump sum amount of 1 lakh rupee out of the total loan of 5 lakhs rupees, what is the motive for paying it in advance? To reduce my interest burden. And if so the point is that if at a point of time when I had paid the 12 months of advances, going by his example only, my outstanding is say 1 lakh rupee and I have paid 30,000 rupees. So from next month onwards, my interest will be on the 70,000 rupees or on 1 lakh rupees. Obviously, otherwise why would I pay? And if I have paid that 30,000 rupees in advance of 12 months installment, I am obliged to pay my interest for the next month. So, my submission, and I need your expert advice also on that, because we had discussed when I was the central auditor at that point of time. My submission, sir, here is that there are some issues I can discuss again for 1 hour, but the point is that Reserve Bank or the regulator should come up with this type of clarification in this regard. They are silent, but sir, when the SSM is taking the meeting every quarter of the central auditor, they are, એ લોકો તો આપણને એમ જ સમજે છે કે આપણે જ અમને ये सब किया हुआ है. Then they will fire us like anything. And their language, their tone, જે લોકોએ અનુભવ કર્યો હશે ને ખબર હશે, મને તો છે જ. આપણને ઘણીવાર એમ થાય ઘરેથી કાઢી મૂકે, કાંઈ મિલકત ના આપે તો કાંઈ નહીં, પણ આવું સાંભળવું નથી. But the point here is that regulator is silent on that. I request PD committee chairman also for this, that sir, we should escalate this type of clarification from the regulator. See, auditors are there for 3-4 days, they are the guest only. And second thing, now since last 2-3 years, everybody has observed that public sector banks like private sector banks, their balance sheet date, earlier it was on 15th of May or 28th of May, because they have got 2 months of time. They are now compelling the auditors to complete by 26th of April. And second, one more weapon in their hands is that if you don't complete within 3-4 days time, right, it means you are not capable of doing this in 3-4 days time, and we will consider this branch as the unaudited. You see, we are discussing from the auditor side, banker side, that is fine, but we have to sit on the other side of the table also. And we have to, we are also required as a branch, no, I am not claiming, but the thing is that the institute should also represent at the appropriate level, that how difficult it is for all of us to complete this in this much time without any cooperation. And second thing, with this unique product, again, we can discuss about this gold loan. Again, the very, it has become Titanic now. Gold loan, and with this increasing price, what is happening with the gold loan, evergreening on the gold loan account? Second, one more issue is about the trade finance, bill discounted on the trades platform, right? In all practical purpose, Mercy was asking about the multiple bank arrangement and the consortium banking finance. In my humble opinion, this e-trades bill discounting, right, it is in all probability there is a chance of double financing. And second most important part is, it is for all practical purpose, again it is unsecured. Again it is unsecured. For want of information, it's only on the system. You see, the banks are participating in that. Earlier, traditionally, bill discounting was of the debtor of the borrower of the bank. Now it is to accommodate or to facilitate the MSMEs, right? Government introduced this, but there is no platform from Reserve Bank of India, the government regulator side also, that whether it tantamounts to double financing or not. I can very well give you the example. Probably I have not given. I'll give that one example. In one of the consortium finance of one of the borrower of the corporate, the outstanding was 600 crore. Those who are doing the concurrent audit or associated with the banks in any other fashion must be knowing that what is the working capital assessment. Working capital assessment is clear current asset minus current liability, that is a gap. After reducing the margin, whatever is to be given, that is the finance from the bank. Now the point here is, there were 10 banks, sir. We have discussed. There were 10 banks actually, and the lead bank was one of the very big bank of India. Now the point is that all the participating 10 banks have sanctioned 25 crore each out of the consortium to the borrower, that corporate. Right? Now with the concept of anywhere banking, borrower was from Bangalore, fund was parked in the one of the branch of Pune, that is hypothetical I am giving. Geographically also, it was not digestible that a person sitting in the Bangalore running his business in the Bangalore, how he will do his financial compliance and everything from Pune. Now second point is, coming to that, 600 crore was the working capital sanctioned by the consortium finance, 250 crore was out of consortium finance by all the members participating bank. So I asked them the foolish question. અને હું તો તમને કહું છું, બેંકમાં હું દર વખતે ડાયસ ઉપરથી કહું છું, બેંકમાં જઈએ ને, અહીંયા કોઈ આર્ટિકલ ક્લર્ક્સ કે જુનિયર બી કોઈ બેઠા હોય ને તેમના બેનિફિટ માટે 10 સવાલ પૂછવાના અને એમાંથી 7 સ્ટુપિડ ક્વેશ્ચન જ પૂછવાના. અને ખરેખર સ્ટુપિડ હોય તોય ભલે હોય, એ જેટલા ઇરિટેટ થશે એટલો તમને તમારા કન્સેપ્ચ્યુઅલી તમારા જવાબ મળશે તમને. નાઉ ધ પોઈન્ટ ઇઝ that I asked her lady that question, that madam, this 250 crore exposure out of the consortium, right, in case of any unfortunate event, whether another bank or your bank will participate in that unfortunate event? Obviously answer is no, because it was not in the consortium finance. And the thing, sir, is that working capital assets was 600 crores. Working capital facility the gentleman was enjoying was up to 850 crore. That was not the sanction amount, that was disbursed amount. He was utilizing that. Right? So with these type of questions actually, and it is, I am sure that at the branch level, if you are fortunate or unfortunate, if you get the dedicated e-trades branch, in that case you will have to face. Second issue is about that Mr. ABC Corporation is enjoying the facility from A bank, right? And he has availed this trade discounting from B bank. What mechanism is helpful for the auditor, or for that matter even to the bankers also, to know that ABC Corporation has utilized from my bank and he is not utilizing the facility from the other bank? Right? Is there any mechanism? Again, the answer is no. Now my point is, બહુ બધી વાતો થઈ ગઈ કે 4 દિવસમાં પતાવવાનું ને પછી અહીંયા બારગામ આ મંદિર હોય ને પેલું હોય, બધું છોડો. But let us discuss on this on a serious note, કે આ જે નવા ડેવલપમેન્ટ થયા છે, we should be aware of that product. I'll be very honest, e-trades I was not knowing. After reaching the bank, I came to know about this product. But first and foremost, I gave some time, 2 hours, 3 hours, to understand what is the product. Right? So now the point is, sir, my question is again to you is about to throw some light on this technical write-off. It is gaining momentum in each and every bank. Earlier, one bank was there, we know which bank was there. Now it is in 3 to 4 public sector banks, sir. Please, sir.
I will just answer 2 questions.
Yes, please.
The rest of the answers you already given. So as far as this technical write-off is concerned, I think the question was that whether the account can be technically written off when the account is in substandard category. Now see, as far as the banks are concerned, if they are having surplus of BDDR, that is the only case wherein typically the banks are resorting to this technique, wherein substandard assets are written off. So just to give an example, suppose the account value is 100 crores and the account is marked as substandard. Let's say 20 crores is the provision made. And to ensure that, the excessive NPAs are not shown, at that, 20 crores level itself, the account gets written off. I think that is the query. See, as far as technical write-off is concerned, it is governed by regulatory norms as to when you can write off the account. Now, typically, an account should be written off only when all, measures of recovery are exhausted. So that is something which one has to practically demonstrate. That is the first thing. If those are exhausted, then the second step is that what the bank is supposed to do. Let's take a case that it's a genuine case wherein substandard asset, the bank has taken all the efforts. I'm talking about a genuine case. Like suppose the borrower has he has died. So practically even if it is substandard, there is no chance of recovery, presuming that the security value is also negligible. In that case, or even in other cases, firstly that substandard asset account has to be converted into a loss asset category. Means I am talking from banker's point of view. I will come to the auditor's point of view at a later stage. As far as loss category is concerned, it is up to the bank or the auditor or the RBI inspector to declare any account as loss asset wherein there is no chance of recovery. Now when I say no chance of recovery, that is something I need to establish on paper. If I am not able to establish that on paper, and if I am going for technical write-off when the account is in substandard asset category, then there is something wherein I failed to pass the test, wherein whether all the recovery mechanism was exhausted. If that is not exhausted, and if the bank is simply pushing all substandards into a write-off category, I need to take help of that particular RBI circular wherein it is specified that you have to take means you have to exhaust all the remedial measures. If the remedial measures are exhausted, presuming on a better side actually, then firstly bank has to declare that as a loss asset, then they can write it off. But if that mechanism is not followed, it means that the bank is still having some hopes from that account to recover. So even though the bank says that the ultimate end result is going to be the same, that has to be proved on document. That firstly the bank should say that these are the loss assets. They should have courage and conviction to say that. Now having said that, if the bank really does that, then what is the next thing is that the auditor should verify as to what kind of measures the bank has taken, and how come within 1 year span the bank is saying that there is no other possibility of recovering the accounts. Because within substandard means within 1 year the bank is exhausting all the measures. If this is not done, the auditor has to simply qualify the report by specifying the facts that all the measures related to recovery were not exhausted, and before that itself the account is has gone for technical write-off, and bank should qualify, the auditor should qualify the report, irrespective of amount, irrespective of the materiality aspect.
But sir, the interesting part is that if the one particular account which is technically written off, even if within the substandard category, the account was in substandard category, and if the borrower regularized
the second part I forgot
account,
to tell. Since you didn't ask me, I didn't say.
Sorry. So that's the reason. Yeah. So second issue, and that is very interesting and more damaging. The point is that if the borrower has technically written off account, and if he regularizes the CCOD, how the banks can upgrade that account and permit the transaction?
No, that is something which should never be done. See, it can be done in a very remote case, that wherein genuinely the account was a defunct company.
This is the practice in the bank.
See, where it will be a valid case is, I will take a rarest of rare case where it can be valid. Otherwise, it will be always a wrong practice. The valid case is that suppose there is a sunk company, a defunct company is there. That say infrastructure company is there, no one is paying them. So it's a defunct company. The account is NPA, the account is technically written off, and all of a sudden they suppose win a court case. They get a compensation from the government or those the other parties, and because of which there is a recovery. So it's a genuine case. You can bring it back. But in all other cases, wherever the amount is recovered in technically written off account, it's only a recovery against technically written off account. Operation should never be allowed. There is no question of allowing the operation. The recovery is fine, to a certain extent. Again, upgradation is something which is not supposed to be done in technically written off account. There is no RBI guideline for that. That I can do a account in the sense, see, otherwise it loses the meaning of technical write-off. Technical write-off means I take those accounts out of my books. I cannot bring it back to my books of account under some reasons, unless as I said, very rare case, wherein it's a genuine kind of a case which you can also validate that it was something which was very abnormally revival for any company. Otherwise, it should never be done. If the bank is doing that, then that is not really a banking practice also, and it's not fitting into any regulatory norm. Now the bank can argue that where it is written that this cannot be done. So in that case, auditor should put a question other way around, that where it is written that technically written off accounts can be written back. There is no concept of write back of any accounts. And I will tell you one interesting thing. The concept of technical write-off started off from income tax angle, not from banking regulation act, not from RBI's angle. So it's a kind of a tax saving tool, nothing beyond that. So you cannot bounce it back and again bring it to the standard asset category. Now you can ask one more interesting question, that how this technically written off accounts when they are revived, so-called revived, how that is taken care of as far as computation of income is concerned. Because there you have already availed all the benefits, you have availed all, earlier BDDR which you have used for that allowance and other things, that is something which is practically not possible and technically also not possible. So if I was in your place, I will qualify the report.
No, I'd also qualified.
Yeah, so
obviously.
So we are on the same page. So there is no disagreement. Now the second point actually.
But these are the very interesting
of
issues,
course.
Which is more important at the branch level.
Yeah.
It is being done at the branch level.
If there is any technical, see actually, but only my contention is that many a times at the branch level, they simply give a advice from head office that this particular account is technically written off, at the central office level. What as a branch auditor you can do, see many a times if it is a central office recommendation, it only gets transferred, it doesn't get written off at the branch level. Because write-off actually takes place at the central level. But if you are aware that a substandard asset is picked up for write-off, you can always mention that in EOM para that this account is transferred to central office.
But sir, in advances related statement, again my system is I am checking the substandard provision vis-a-vis the substandard.
No, but it will not be there at the end.
No, एक second. That is in the books of account.
Yeah.
That is still there in the advances related
But that will be at head office level, not in my books.
That is fine. But I am telling you, sir, that while verifying the advances related statement, my style is that, as we all know, that 15% is the provision against the substandard outstanding.
Yeah.
If the 15,000 rupees is the substandard provision, my outstanding should be 1 lakh rupee. Right? Ideally, it should be 1 lakh rupee.
Yeah.
But in that case, it came to 73%. That raises my eyebrows.
Yeah.
Why? Because 73,000 against the outstanding of 1 lakh rupees, that how come it is possible? So he told me, I inquired with the head office also. Branch had no answer to this. So I inquired with because I have to sign that advances summary set. So he told me that we have provided for 100% in substandard category. Right? So anyway, this 15% or 25% is the minimum provision requirement.
Higher you can make. He took benefit of higher provision.
Higher provisioning.
No,
but at the head office level, sir, at the head office level, when I escalated this to the head office level, right, then I came to know that they are classifying the account straight away to...
See, my contention is that, first thing is that many a times, return of accounts per se, they don't appear in NPA summary at the branch level, I am saying.
It is appearing, sir, everywhere. What they are doing. So the trick is, they are providing at the branch level 100%. If I have availed the loan
I have seen a little different thing. In some banks, what they do actually, whenever there is a technical write-off, firstly they send an advice to the branch for transfer of account to the head office. If that is not the case,
it is nothing but the balance sheet management.
No, that is true. It's a balance sheet management.
To keep the NPA ratios low, it is the balance sheet.
No, that is fine. But my contention is that if these things are there at the branch level, then it's not an emphasis of matter para. Then it becomes your main qualification. If it is something which you are only aware that it has got transferred because the bank is proposing to write off. So you are aware about the fact that substandard is taken to head office. Then since it is not appearing in your balance sheet, it's difficult to qualify a report, because it's only a transfer. But you are aware about the fact, so you put it in emphasis of matter para. Let the central auditor take a final stand. Because at the branch audit, unless and until that appears in your financial statement, that is which you are signing, you cannot really comment upon by way of qualification. So that becomes a kind of a hindrance block. If it is appearing, definitely one can qualify. If it is not appearing, probably EOM or other matter, or maybe communication to central auditors, or maybe a special report to the central auditor will work. Now coming to your second question. As far as this advance installment repayment is concerned, I know that I am reiterating certain things. I'll just take 1 minute for that. See, we need to first look at the definition of NPA for term loans. It talks about, as he rightly said, if principal, interest or EMI, if it is overdue for more than 90 days, the account will get marked as NPA. Then there is a second para, means another para, which talks about the overdue definition. In overdue definition, they are only mentioning only one fact, that whatever is the commitment is there, or whatever is the repayment schedule, just to put it in simple terms, is there, which the bank has prescribed to the borrower. If he is deviating from that, in the sense, if there is anything in arrears to that, then only it will be called as overdue. That's the definition which is given. Since that definition is given, suppose say, by taking the same example, suppose bank has told me to pay 10,000 rupees per month. If I pay 12 such obligations in advance, I am fulfilling the obligation as per the overdue definition. So since I fulfilled the obligation, bank cannot call me a defaulter. Bank can maximum say that your interest is unrealized. Fair enough. Interest is unrealized. Now that unrealized word actually, it's not appearing in criterias of NPA. It appears in another para, wherein once account is marked as NPA, then only unrealized interest component will be invoked, not before that. So unrealized interest necessarily need not be an overdue interest. So that's where the disagreement is.
But
Right.
the disagreement is here.
Yes, sir.
Yes, there are two options. Either you reduce your EMI
No.
or you
If that
reduce
option
your
is
tenor.
there, see, if the option is there to reduce EMI or tenure, it's a different story altogether. We are talking about the case wherein repayment schedule is intact. Repayment schedule is not affected. What you are saying is right. So in some banks, they have a contractual thing that whenever lump sum is paid, your EMI will change or your tenure will change. So tenure will change.
No, I have
No,
my
but
own
that depends
example.
upon the contract actually.
Sir,
No. There is a contractual obligation that if you pay in advance, some banks might say that your EMI still remains constant, then your tenure will get reduced. Now, in that case, your repayment schedule has to undergo change. Your key fact statement has to be shared.
my own example, my housing loan, when I paid the lump sum amount, I got immediately message from the Kotak Bank, right, towards what we have to adjust this advance payment. Right? If it is principal, we have to reply in the SMS because they are sending the SMS. If this is towards the principal, obviously it is towards the principal. Then whether you want to reduce your EMI or you continue with this same EMI so that your tenor will get automatically reduced.
No, but
That
this
is the
example actually is only if it is written in contract, not otherwise. It's not automated. There has to be a contractual agreement.
But ultimately, sir, we should go by the principle itself.
No.
What is the motive
In
to
the
pay the
agreement,
lump sum payment?
No. I will give you an example. As all of you are aware, actually, prepayment no more attracts a penalty for small
Yes.
borrowers and individuals.
Yes.
Right.
Part repayment.
Part full anything actually.
No, in case of housing loan, but in case of business loan or the personal loan, to the best of my knowledge,
No, MSME are exempted now. MSME are exempted now.
exempted.
MSME also.
So I am not
MSC,
aware of.
MSC, sorry.
It's just a declaration.
No, that is, no, it's not
a
so.
declaration
It's not
that
so.
it is out
It's
of
not
my
so.
own sources. Simple.
It can be from anywhere. Now, see, having said that, on one side we have RBI regulatory part, wherein the banks are prohibited from charging me any prepayment charges. So that is one thing. Secondly, my contract, contractual agreement should provide for all these scenarios. If not, my repayment schedule can never undergo change. So it will entirely depend upon what kind of sanction letter the bank has issued, which are the sanction terms which I have accepted. There are many banks wherein this term is not there. I can repay at my will. Only obligatory part is that I should fulfill that repayment schedule. When I repay is irrelevant actually. I can opt to pay daily also. Like suppose 20,000 is my installment, I can repay 1,000 daily. Point is that why that key fact statement is there and why RBI is mentioning that you need to explain the key fact statement about one point as to how your account will turn into NPA. You show me a case in key fact statement wherein the banks are saying that if the interest is unrealized, even though in spite of paying in advance, your account will be turning into NPA. There is no bank which says that is an IT. There is a reason for that because it is practically incorrect to say that if someone pays in advance, he has to again pay the interest also. Right? So go through the key fact statement, see that which kind of examples which the bank is giving to mark that account as NPA. And you take my word, no bank is there which is specifying that because of interest unservicing, the account will turn into NPA. It will always talk about overdue. Secondly, even in my CIBIL also, if you look at the CIBIL, and if you look at any CIC actually for that matter, the bank never, specifies its unrealized interest as my default. Because...
But sir, the logic which you are telling,
Yeah.
for your opinion,
Yeah.
see, banks are coming up with the another logic.
Yeah.
The logic is that since my Theo balance is less than my is more than my outstanding,
Yeah.
right? I am not classifying the account as NPA. My system is not classifying the
Perfect.
account as NPA.
Correct.
That is what banks are submitting.
Correct.
Right? So the point here
Okay,
is,
you want to deviate from bank stand.
eh?
You want to deviate from bank stand.
Now, obviously, why?
No,
Because,
then
see,
I have
we
a
should
different
go by the
condition.
logic
Okay, I will
itself.
answer this query then. I will become a banker and answer this query. See, what RBI has prescribed me, I have to communicate with my customer about when I will mark that account as NPA. Right? That is a key fact statement. One of the component of key fact statement. In key fact statement, firstly, I have never mentioned that unrealized interest will be the contention to mark that account as NPA. That is the first thing. Secondly, if you look at the SMA 0, SMA 1, SMA 2, again the heading, if you look at it, it's overdue. Nowhere it talks about unrealized interest for 1 to 30 days. Unrealized interest for...
That is overdue only.
No.
Interest is not
No,
paid,
no.
that's why
Okay. Now
interest
let's
is
come to
overdue.
okay. So let's come to the definition of overdue. The definition of overdue nowhere contains the word as unrealized. It only talks about if I don't go by my repayment schedule, that is an obligation, then only I will consider that as overdue. So if I want to argue that unrealized is overdue, the overdue definition should include the word as unrealized, which is not the case.
And my final question to you, sir,
Yeah.
I did
So I
discuss
presume
with-
that his answer is acceptable to you.
Then I did discuss with the Lokesh ji also.
Okay.
What is your opinion about this new product called general purpose loan to the corporates? General purpose loan is the new product, sir, as we all know. That is for the general and corporate
Without
purpose.
having any end use.
You can utilize the loan
You can utilize as you want.
as you want.
Yeah.
And the purpose for the availment of this loan is, and at the same time, the chartered accountants are also certifying. We are certifying that at the time of utilization of those loans those funds is that the loan was utilized for the purpose for which it was availed. So, what is the purpose of general purpose loan? And sir, this CP is also becoming titanic in the banking industry, sir.
See,
when
this-
there is no
Yeah.
end use fund end use requirement is there.
Yeah, see what probably as an auditor what we can do is that firstly we need to look at the we should start from the application form as to what for the loan is asked for by the borrower. So typically they will write that for business purpose. Let's presume that. Now if that is for business purpose, the conduct of account should demonstrate that it was used for a business purpose. Just to give an example, like suppose a general purpose loan is availed, typically that amount might get credited to the regular CCOD account. That's what really happens. You need to monitor the subsequent entries as to ultimately where it has got utilized. Now I will tell you where the challenge is. Suppose there is an immediate end use, like immediate withdrawal entries are there. So there is one deposit entry followed by subsequent withdrawal entries which are related to business. To certain extent, partially one can say that it is used for business. Partially I am saying. The challenge over there is that, a borrower who is, wise enough, what he will do, he will avail this general purpose loan. He will wait for a certain period. So CCOD will be within the limit to that extent. After a certain period, actually after a couple of transactions, maybe 4 or 5 pages of transaction, he can simply withdraw the capital also. Typically in case of LLPs, partnership firms, or even in case of private limited companies wherein quasi capital is introduced. Now if that is the case, actually the challenge is that the chartered accountant will certify that the end use is met. He should not specify that the end use for which the purpose is given, for which the loan is given. That is something which is absurd. That one should not do, because ideally the one who is certifying that about the end use, he should go through the sanction letter. And based on sanction letter, he is supposed to issue the end use, confirmation letter.
Sir, sanction letter also it is mentioned for general corporate.
No. So if that is the case, one should not certify. See, there is no point in having your CA degree at stake for some few thousand rupees of certification. If you are not able to certify something, or if there is something which you can never certify, you cannot certify general purpose. At the most, you can put a disclaimer by saying that the entire amount was credited to the CCOD account and stop at that point. And leave it, rest of the things to the judgment of that particular thing, so that certification CA is saved. Now, if you are an auditor, then the challenge is that you need to go through the account on an overall basis, look at the ledger scrutiny, and verify that whether that end use was really into business, to maybe expand the business, or whether it was to regularize the CCOD account, which was otherwise irregularized. And we should eliminate the possibility that quasi-capital or own capital, ultimately, this end use is not resulting into reduction of that. By way of withdrawal, one can simply withdraw. But that's what practically happens. If he wants to withdraw the capital, general purpose loan is taken and the capital is withdrawn. And one cannot sanction a loan for withdrawal of capital. At least I have never seen that kind of ideas.
In LFAR also there is one question, no, that, that is what we discuss.
No,
That
but we
the
can
loan is-
disclaim it by saying that this is general purpose loan, end use is not specified.
Exactly. Yeah.
Rather, you should add one harsh comment by saying that the branch manager has not specified anywhere that the end use was insured. Because in post-sanction, one has to monitor that whether the end use is monitored or not. So have that, pointed out as a lacuna. That is the easier way, or a practical way, I should say.
Thank you. Thank you so much.
Thank you, sir.
Next question.
And special thanks to Hitesh Pomal, sir, for sharing their practical knowledge and, valuable insights. So, as we come to the end of this enriching panel discussion, I would like to take a moment to reflect on the valuable insights shared by our esteemed panelists today. So this discussion has clearly highlighted that the bank branch audit today is not merely a compliance exercise, but a responsibility that plays a vital role in strengthening the integrity and the stability of the banking system. I am confident that the guidance and experiences shared by our panelists will help all of us approach our audit assignments with a greater clarity, diligence, and professional skepticism. On behalf of everyone present here, I extend my sincere gratitude to our respected panelists, including Hitesh Pomal sir, for sharing their time, knowledge, and practical wisdom with us. Sir, your insights have truly made this session meaningful and thought-provoking. I would also like to thank organizers for providing the excellent platform for the knowledge sharing and professional interaction. Lastly, I thank all the participants for their active presence and keen interest throughout the panel discussion. So with this, we conclude the panel discussion. I hope the takeaways from today's discussion will be helpful all of us in conducting more effective and insightful bank branch audit in these days ahead. Thank you once again and wish you all a very productive and successful audit session. Thank you.